welcome back to JPX Energy Market Weekly Updates. Crude oil futures were higher at last Friday, extending strong overnight gains and sending WTI and Brent front-month contract further above the $90 handle as freezing weather in Texas has hurt some oil supplies. Oil markets are also supported by other risk factors that may affect oil supply, such as Russia-Ukraine crisis and OPEC production limits. The United States National Weather Service warned a large-scale and massive winter storm that will affect the central, eastern, and southern regions of the U.S. over the past weekend. Some media reports show that freezing weather in the United States, which has spread from the Midwest south to Texas, has disrupted operations at some Permian oil wells, as icy roads have prevented some trucking operations that is very crucial for oil production. The Permian Basin is located in West Texas and extends into southeast New Mexico. The area is particularly sensitive to below freezing temperatures, as its infrastructure is typically less weatherized against cold weather than production zones farther north. In Texas, temperatures below -7 degrees Celsius are expected in the coming days. Temperatures in Midland, the economic center of the Permian Basin, are reported to drop -11 degrees Celsius. As you can see from this figure, the weather is forecast to warm through the upcoming weekend, but only modestly, with low temperatures remaining relatively low, and this could still disrupt oil and gas production in the Permian Basin. Initial production estimates from Plus on February 3rd shows Permian gas production dropping about 12% compared with the prior week average. And EIA reported total crude output at a 10-week low of 11.5 million barrels per day during the week ended January the 28th. Last February, a historic polar vortex event hit Texas and the United States mid-continent oil and gas producing states and brought a cascading effect on the local energy market. When natural gas production is disrupted, it will affect the supply of electricity, and many pipelines and pumping stations also need electricity to drive, which will further exacerbating the energy shortage. Though it's not as bad as it was last year in terms of current data, and in the event of freeze-off, production could come back online relatively quickly after the return of temperatures to normal ranges. But any disruption may send prices higher on the back of low inventory and tight supply and demand balance. Market concerns about possible freeze-offs were evidenced in regional spot gas and crude pricing. The WTI rally was realized mostly at the front end of the curve. Brent crude complex is also in its deepest backwardation these days, indicating a tighter market fundamental. Compared with Western benchmarks, JPX Dubai intermonth spread remained relatively weak, because growing supply from Persian Gulf and relatively weak demand from China recently, though the backwardation has also deepened to 1,650 kiloliter, or around $2.3 between April and June contracts. The spread between JPX Dubai and IC Brent has reached the lowest level since 2020 during the past week. In the medium term, shrinking OPEC capacity and the regression of demand from the East may support the spread down the road. However, the downside risks still remain. The return of Iranian oil is one possible factor. Last week, OPEC agreed to extend its 400,000 barrel per day supply additions to March 2022. But in the past few months, the market focus has increasingly homed in on the alliance's continuous underperformance of production targets and shrinking spare capacity. Besides some West African producers struggle to hit their quotas, it is reported last week that Iraq flags difficulties ramping up output due to limited availability of water for injection, aggravated by the southern field's historically elevated water cut. It will not be able to ramp up production tangibly above current levels. While the tension between Russia and Ukraine has not ceased, there is some good news for oil consumers. The Biden administration tried to restore some sanctions relief to Iran's civil nuclear program as talks aimed at salvaging the languishing 2015 nuclear deal enter a critical phase. The waivers will extend foreign countries and companies working in the Iranian civilian nuclear sector from American penalties. Iran says the loosening sanctions was not enough, that the country wants to guarantee the 2015 nuclear deal will be reinstated. So the eventual U.S. sanction relief for Iran could seize the market tightness and may bring some pressure to the Dubai benchmark. Okay, that's all for today. Welcome back next week.